Hey everyone, Julius de Kempenaer here with a new video on RRG. I'm recording this on Thursday, the 20th of March. For this week, I wanna start with a high level. I want to start with looking at what's happening in asset class rotation, and then move on to sectors, and then jump into one specific sector which I think is making strides at the moment, and we're going to dive into that at the end. Let's get started with asset allocation. I've loaded up the RRG with the various asset classes as we have it as a predefined group on the RRG page. And what immediately catches the eye is the outsized move of Bitcoin. It's a bit of the same old story that we've seen for many months now. And, despite the loss of momentum that we see coming through Bitcoin at the moment, it is still the highest ranking asset class, if you wish, on this chart. It's inside weakening. It's got a pretty long tail, so there's quite a bit of power behind the move, but there's also still plenty of time and room for Bitcoin to curl back up and resume its relative uptrend versus VBINX in this case. For this purpose, I'm going to switch off that tail because it's distorting my picture. I'm going to fit it so we see all tails nice and tidy. And these two green ones here are commodities, GSG and DJP. So this tells me that commodities are still in a relative uptrend, but they are losing a bit of relative momentum, which is not a big surprise because they came out of a super long downtrend, relative downtrend. They took some time to build that base and come out of it. And that happened pretty much, when did that happen? Like, I'm going to say right here, which is mid-January, probably. That sounds about right. Got all the way there, and now we're losing a bit of relative momentum. The big stuff, the main move is happening right here. That is where SPY is now inside weakening and moving towards lagging. That's not a good sign, and it's accompanied by the dollar index. Dollar index getting hammered, weaker, and it means that euro dollar is actually going higher. We're very close to 110, 108, 109. And then here are the fixed income tails. So corporate bonds and government bonds almost on top of each other. And then there's high yield, which is, doing a little bit better. But I think that the main move and the main message from this RRG is that the odds for bonds to outperform stocks is now higher than ever. And I'm going to say for the next couple of weeks, I think we need to focus more on bonds than on stocks. Longer term trend for stocks, I'm going to say that it's still up, but we do need more of a correctional move, I believe. And let's jump right to the chart of SPY so we can get that out of the way. This is the weekly chart that I've been tracking, and I think the most important observation here is that we've got this top formation completed already for 3 weeks ago, and we're now in the third week, and we're still not able to push back above that former low. So this high is now, I'm going to say it's confirmed. And that means that there is downside risk. It's probably going to be somewhere in this area here around 540. And if that gives way, then, the bottom of that trend channel looks like a pretty good area, which means that we've got, some 500. That's probably some 10% to the downside after we break this. So initially it's going to be, I was at 540 area, which is another 25 points. That's about 2 to 3%. And then if that gives way, then it opens up a lot more downside risk. That is supported by negative divergences, especially in the MACD. I don't like the one in the RSI so much. I've told you that before. But this one is really working out right now, and it needs a little bit more time to actually mature and digest that move lower. So from my point of view, based on the asset class rotation, based on the chart of SPY itself, this longer term move is still there, but it looks as if we do need a little bit more downside to basically to digest everything that we had in the previous years. It's the first time that we're going to see a decent decline, maybe something like that we saw in 2022. Anyway, we can't look too far ahead. The top seems to be in, at least for the near term, which means that the upside is very, very limited and downside risk is increasing. And those are not the odds that you want to see to build up long positions or to be fully long. That's pretty much the short version of this story. When we move to sector rotation, we load up the S&P 500 sectors. Talked about this chart at least last week as well, and it did not change very much. What you see is that financials and communication services are still inside the leading quadrant at good headings, and they're doing what they are expecting to do. They're outperforming the market. Now, the two negative tails, technology and consumer discretionary. And if you track my blog, The Best 5 Sectors, you will have noticed that both of them are now out of the top 5. And that is because of the combination of the daily and the weekly. So that blog uses an approach that combines daily and weekly RRGs, daily and weekly RRG metrics, and comes up with the top 5, which is a mechanical system, basically, if you want to. And in these videos, I'm trying to sort of talk around it and make it a little bit less mechanical, but the back end of that is a mechanical tool, and it has excluded technology and consumer discretionary. In that last block, the healthcare sector has entered the top 5. So communication services, financial staples, healthcare, utilities. That was the top 5 at the end of last week. If I run the model right now, consumer staples dropped out of the top 5 and energy is moving in. And if I look at the values, if I look at the metrics, I think energy is going to enter that top 5 at the close of tomorrow, because the move is too big to be reversed immediately. I just don't think that's going to happen. So the energy sector has my attention at the moment. And if we go back to the RRG, then we see that energy is actually leading this entire pack inside the improving quadrant. I'm still very, maybe not surprised, but it's a situation, it's a rotational pattern that we don't see that often, where there's only 2 sectors moving at a negative heading and all the others are at a positive heading, whereas most of them are on the left-hand side of the graph and only 3 of them are on the right-hand side of the graph. So it's a pretty unevenly spread out universe, and obviously that is because of the big weight of technology and consumer discretionary. Although consumer discretionary is definitely not the second biggest sectors. It got healthcare, financials ahead of it, and maybe also communication services, I'm not sure. We look at this chart on a daily basis and we got a little bit more granularity, and you can see why energy is entering that top 5, or very likely to enter that top 5. And it's actually doing that at the cost of consumer staples. That's XLP, which is moving out of that top 5. And then we've got healthcare, which is still at a high reading. You've got utilities still there, materials, industrials, not so much. And then financials and communication services, that's interesting. They are inside the weakening quadrant, but they are also still the number 1 and number 2 tails. And the reason why that is happening is because they are so high on the RS ratio scale on the weekly graph. Communication services needs a little bit more time. That's at a negative heading. But when I look at financials, that has already started to curl back up, making it a very interesting sector. And we looked at some of the individual stocks in a previous video, and that is now playing out quite nicely. As I said, energy, the energy sector, look at this move here. This is a very long and strong tail. It's probably the longest tail on this daily graph, which means that there is a lot of power behind this move. And combine that with the weekly position for energy, which is also a decent sized move, and you can understand why energy is entering that top 5 sectors. That is the reason that I want to dive into the members of the energy sector. If you look at the individual stocks inside the energy sector, and we start with the RRG for the holdings in the energy sector. And again, that's a drop down on the RRG page. You can just load up a group with the members of XLE, and you will get this chart. Let's stick with the weekly graph because pretty much doing everything on the weekly time frame. It's got a little bit longer shelf life and it looks at a little bit longer term trends. Now, if I work my way through all the tails on this graph, on this RRG, then I'm going to find a few. And the way I do that is I select one, and then I use my arrow keys, my up and down arrow keys, to toggle through this universe and basically make up my mind which stocks are interesting enough to look at on the price chart. So CTRA, not so much because it's moving lower, has not so much. Now CVX, I'm interested in. And one of the reasons is, first of all, because it has that positive heading, but look at how short this tail is. These tails are 3 periods. All the tails are 3 periods. But look at how CVX is very short, but for example, APA is a long one, or EQT or KMI. We can actually make that a little bit longer, and that shows us. So here is 5 weeks of data. And I know these, do it again. CTRA, so here is HAS, and here is CVX. Look at how short, again, that tail is inside the leading quadrant. What it tells, and obviously CVX, Chevron, is one of the bigger stocks in this universe. So it's very close to the benchmark, but it's on the right-hand side, which means that it's outperforming that benchmark. And a short tail indicates that it is a very stable relative uptrend. So that's a good thing. That gives some legs to the outperformance of the energy sector. Let's continue. So EOG, pretty much the same. EQT is getting out of favor. And then we got TPL, which is starting to pick up again. And then we got TRGP, and these are all heading at a negative heading, getting out of favor. Now we've got 2 and 3 inside the lagging quadrant. So XOM, I need to actually scroll that back up. So XOM is actually inside the improving quadrant, getting back into favor. And here is PSX. That's actually a very nice move. MPC, not so much. This is rolling over. APA rolling over, DVN rolling over, and then we're in that lagging quadrant again. So we can move all the way back up. So which are the stocks that I want to take a closer look at? And these are PSX, SLB, XOM, and CVX. And obviously XOM and CVX are the big names in this universe. So that, as I said, it gives legs and it gives a good foundation for a move in energy. These stocks are big enough to carry that move higher. Let's take a look at the individual charts for those 4 names. And let's start with PSX, Phillips 66. If you look at the price chart, it's still showing lower, at least lower highs, not so much lower lows, but there is some overhead resistance. But what is most interesting to look at is the relative strength line. And you can see how that long-term downtrend, relative downtrend, is about to turn around, is trying to turn around, and it's starting to drag those RRG lines up. And that's positioning PSX inside that improving quadrant and ready to push higher. Now, the second one is SLB, Schlumberger. And that is this chart. Kind of the same, although the relative downtrend for SLB is much longer. Look at this, is about 1.5 years, 18 months of relative downtrend. And we're now about to cross over into the leading quadrant. We still have overhead resistance in price, but as you know, everything is relative. So if a stock like SLB remains at the same level while the S&P is going lower, it becomes an outperformer by itself. And that's for the entire sector, of course. So SLB coming out of that long-term downtrend, long-term relative downtrend, and if we see confirmation in the price by a breakout, that will help the case for the energy sector, and especially SLB, to more outperformance. And then the third one is, let's go for XOM. So if we go to XOM, then you can see how that broke out of that bottom formation here. This stock did relatively better than the others. Look at this. Here the relative strength is much more sideways, except for the last Q4 of 2024. But other than that, this stock actually remains sideways. It's now coming out of those doldrums. It's starting to pick the RRG lines up. But I like this breakout of this bottom formation. This is a couple of months worth of trading, and we got a very decent, nice and clear break to the upside. And that's going to help this move higher. And this is definitely going to help the relative strength for XOM, in this case versus XLE, but definitely also against SPY. And then finally, we're going to take a look at CVX, Chevron in the same group. Look at CVX. And here is, I think, probably the best chart in this group. Let me make it a little bit more dense, give you a little bit more time. Look at, this is almost 3 years worth of relative downtrend, which is now reversing. We've tried it a couple of times in the past. It didn't happen. And now you see that the RS ratio line moved above 100 at the end of last year. Then we lost some momentum while we were under pressure from this overhead resistance. And now we're breaking higher. So Chevron actually probably the best stock inside the energy sector. There is definitely some overhead resistance to be expected around 170. But my judgment is that coming out of this range here between, what is that, a little over 130, 133, 34, and 150, 160. That's a more important signal. There's a lot of supply being cleared around that 160 area. And well, unless something really crazy happens tomorrow, this break is there, it's solid, and it will very likely carry CVX higher. And that for certain will help relative strength for CVX to move higher as well and push CVX deeper into the leading quadrant. I'm going to wrap it up here for this week. As I said, S&P 500 SPY probably a little bit more under pressure for the next couple of weeks. For now, prefer bonds. Long-term trend still there, so I don't think we're going to see a massive crash, but there is some decent downside risk for the S&P 500. If you look at the sectors, then as I explained, the energy sector seems to be jumping into my top 5. We'll see that in my next article, which I'll be writing tomorrow or over the weekend, where the energy sector is entering the top 5. And then there are a couple of very interesting stocks, CVX and XOM being the largest ones. At least they have enough power and enough market capitalization to keep that energy sector afloat and ahead of the S&P 500. Thank you for watching. I hope you enjoyed the show. Please let us know in the comments. We'll have a chat there. And otherwise, I am looking forward to seeing you again at next week's video on RRG.